obviously carry what Joe Biden is saying in terms of his response to President Zelensky. But let's head now and catch up with the business news of the day. And Ramzan is here. And what do you have for us?
Yeah, we're talking, as always, about Russia and also the problems they're going to face in the debt market. Let's get into that into a bit more detail. It's a big event for market watchers today. It's a debt deadline facing Russia. It's due to pay $117 million of interest on two dollar-denominated bonds, basically those are IOUs, by the close of trade today, or risk being in default. Now, we've heard in the last hour or so that the Russian finance minister has claimed that the payment has been made to an American bank, but that payment hasn't cleared yet. I think we need a bit more clarity on this, so let's speak to Andy Verity, who's our economics correspondent. Andy, can you clear this up for us? Do we know whether Russia's gone into default? Do we know whether that payment's been made? What's the latest?
Well, the clearest I can tell you, Ramzan, is we don't know yet, unfortunately. The latest is what you've just said, which is just that the money has gone in, apparently, according to the Russian finance ministry, to a bank account with Citigroup, but we haven't got any further word as to whether that money has been cleared. But what you can say with a fair degree of certainty is, if Russia is at risk of default here, it's not because it doesn't have the money. It has about $640 billion of foreign currency reserves in gold. And that's money, of course, that it's accumulated over years and years of lucrative exports of oil and gas. So what's happened here, of course, is that the West wants to make it harder for Russia to defend itself economically. And one of the things they've done is made it harder for them to sell their foreign currency reserves at central banks around the world. And that has led to a severe decline in the ruble. It's lost about a quarter of its value. But it's also arguably made it harder for Russia to make ordinary payments to maintain debts like this. However, as you mentioned, the $117 million, which compared to the something like $150 billion that they have outstanding in debt is not a vast amount, has, according to the Russian finance ministry, now gone across. In any case, they do have a 30-day grace period, so it's quite likely that an official default wouldn't be declared by any of the ratings agencies until that grace period was over.
But if there is a default, let's say even if it's in 30 days, who's that going to impact the most?
Well, it's the investors who bet on Russia, really, before all these events took place. You're talking about money here which was lent to the Russian government in exchange for an IOU, a bond effectively, that says, we'll give you the money back in a few years' time and we'll pay you interest in the meantime. Now, that money was lent at a time when Russia looked like a really good credit risk, not least because of its oil exports and the price of energy was high. So foreign investors were more than willing to invest in Russia. And some of them may have underestimated the geopolitical risk that Putin might want to go to war. But I think really some of those losses have already come home, Ramzan, because if you look at how much those bonds are now worth, they're worth a lot less than the promise that they get money back from Russia. And that's the market saying, we doubt whether you're going to get your money back. There's something like 20 or 30 cents on the dollar these bonds are worth. And that's the market taking a very dim view of Russia's creditworthiness at the moment, not so much because it doesn't have the money, but because it can't spend the money.
And just very, very quickly, the IMF seem very confident that there won't be contagion, that other countries won't follow into default like Russia. Why are they so confident?
Well, it's a different situation to all the talk of contagion in the late 1990s. I'm just about old enough to remember reporting on that. And at the time, the issue was that confidence in one area would overflow into confidence in another area. They talked about Asian contagion. And indeed, a crisis in Asia did overflow at that time into a crisis in Russia, and it knocked the value of the ruble. And there was a small default on ruble-denominated debt. But what there hasn't been, since 1918, actually, there hasn't been a default on foreign denominated debt, on dollars. So Russia will do everything they can to avoid that. And in spite of the fact that the United States really wants to put the screws economically on Russia, I don't think there's any particular will, from what we can pick up from what we're hearing in public, for the United States to force Russia into some sort of artificial default.
Andy Verity, our economics correspondent, many thanks for your time. Now, the economic impact of the war in Ukraine is, of course, felt by policymakers across the Atlantic as well. And in just about an hour and 15 minutes' time or so, we'll hear from the US Central Bank, who'll announce whether they're going to raise interest rates. Now, the Federal Reserve Chairman, Jerome Powell, has already said that he's in favour of a 0.25% increase. The move could go some way towards tackling soaring prices. The cost of living in the US continued to rise last month, pushing the annual inflation rate to 7.9%. That's the highest level in 40 years. US interest rates currently stand at 0.5%, and there hasn't been an increase since 2018. Our correspondent Michelle Fleury is going to be following events later on. This is unlikely to be the last rate rise, isn't it, Michelle?
Yeah, I mean, this is expected to be the first in a series of increases. If you talk to economists, they'll tell you they're pricing in at the moment about 6 or 7 more increases this year. There are certainly 7 more meetings over the course of this year where you have a press conference. So maybe perhaps at one of those you might see a 0.5 percentage point increase rather than a 0.25 percentage point increase. Why is the Federal Reserve considering this? The first increase to borrowing costs since they took rates down to near zero at the start of the pandemic? Well, it's all to do, as you pointed out, with runaway inflation and trying to bring that under control. But here's the challenge that America's central bank faces, and that is, how do you balance keeping a lid on inflation, which arguably is already way beyond its comfort level, while at the same time sort of fostering economic growth and not pushing the economy into a recession by raising rates too aggressively? I think that is sort of why we're going to hear a lot of questions put to Jerome Powell at his press conference later about how they plan to navigate that very difficult balance and how they can avoid something called stagflation, which is, if you like, the worst of all worlds, and that is when you have high inflation and slower growth.
We're definitely hearing that ugly word, stagflation, a lot these days, that's for sure. This first increase, though, I mean, it's the first time sort of since we've reached near zero levels during the pandemic. So how significant is it that, it's happening now?
Yeah, I mean, look, America's central bank is arguably the most powerful in the world. Obviously, it's confronting this challenge and we're looking to see what they do today. But after today, all eyes turn to other central banks around the world which are facing similar challenges. I mean, most notably where you are in the UK, where we're expecting to hear the Bank of England make their decision on interest rates tomorrow. More broadly, though, I think there is a sort of, again, a balancing act, not just in terms of the domestic economy here in the United States, but the Fed also, although it won't admit this officially, but it has to worry about if it raises rates too aggressively, what impact does that have on developing countries, which may feel that they have to move to kind of protect their currencies from falling as sort of you start to see this rush of money back to the United States attracted by those higher returns on capital. And if you see that, then what you risk is a sort of a global financial crisis, and that isn't anything anybody wants to see.
Michelle Fleury in New York, many thanks for your time. Let's have a quick look at those markets. They have been pretty buoyant today. I've just heard that Frankfurt and Paris have both closed up over 3.5%. And in Asia, we've had some amazing sort of bounce from the Hang Seng, up over 9%. Its best day since October 2008. But don't forget, it has lost over 20% in 2022 alone. And that's the business news.
Thanks very much.
Thank you.